Hi everyone, it's Chris here from New Zealand. So today I thought I'm going to show you my process of filtering through stocks and finding the ones that I shortlist and that I would like to pick for the week. In other words, my top picks. So in the previous tutorials, and if you haven't watched them, I'd recommend you do that first. We've been talking about the strategy that using at the moment, and that is for day trading or swing trading. And that pretty much means that I don't invest for the long run. It means that I want to buy now and sell within a few days, possibly the same day. That would be great, but never more than a week or 2 weeks maximum holding on to a stock. So that means buying stocks at the right moment and selling them quickly, taking some profit, and then reinvesting that cash that's been freed up to do the same thing again and again. And I've been having a really good run at this lately, and I thought I'd share some of my um, uh, figures here with you. And here you can see for 19 trades, I've had 14 wins and only 5 losses, a winning rate of 73.68%, which is not bad. Um, I've had a rate of return of 35.68%. So that's over 3 months, right? And you can see the blue line there is my performance. The yellow one is the NASDAQ. So that's outperforming the NASDAQ there. And then if we look at the last month, out of 10 trades, only 1 loss, 9 wins, and that's 90% success rate, which is really good. And for the last month, that rate of return is 10.34%. And you can see those dates here at the bottom as of the 27th of the 7th. So this is a pretty good result. And, it's not always as easy as this. Sometimes you suffer some losses. Other times it goes a bit better. And just so you know, these were not all using the same direction of trades. Not all of them are long or short trades. Some of them were long trades. Some of them were short trades, depending on the stocks that I picked. But today I'm going to show you the process on how I work through more than 8,000 stocks on the US stock market, filter them down to a manageable list, and then working through that list to find the ideal candidates that are primed for the best possible success, in my opinion, and using my strategy. Keep in mind, I'm not a financial consultant. I am a software developer and a numbers person. So I am using technical analysis and some other principles that I'll be talking through here and that I've been discussing in the previous tutorials in the series to provide myself with the best possible chance of winning at purchasing and selling stocks. So I'll just show you here some of the previous ones that I've done. So I've got different list colors here, which I'll explain through this tutorial, but my green list is pretty much the ones that I've decided to go green on. Here we can see the stock LKS. I've set up my strategy here, and by the way, we're in TradingView at the moment. Again, I cover all of this, setting it up and how it works, and viewing the indicators in my previous tutorials. So if you're not familiar with that, please have a look at them first. Anyway, I've set up my long strategy here. So this was my entry point here at $30.50. I set my target here at $32.31 and my stop loss at $29.29. And it hit that target price within 4 trade days. So that was really good. Excuse me, I've got a slight cough. And that reached the mark that we set there, which means it was realistic, and that's really good. Also worth mentioning that when I entered this trade, I was looking at the stochastics. This is the stochastic indicator here at the bottom. And what I failed to mention in my previous trades was this is very important, that when you enter a trade, all of the conditions have to be perfect. Like we discussed, the testing of these EMAs and SMAs. There is the volume indicators. There is the candle patterns, etc. But there is also the stochastics. So usually if I go long, I would want the stochastics, this line here at the bottom, to be at a value below 30, right? And if we're going to do the opposite, if we're going to go into a short trade, then we would want the stochastics to be above a value of 70. Ideally 2080, but it's good enough for me if it's below 30 for going long or above 70 for going short. Here was another one from the last week, and you can see SMR, and this one I decided to go short. All the conditions lined up, so we've got the stacked EMAs and SMAs in a bearish trend. So This is the first good indicator. Secondly, we can see this consistent levels that the candlestick patterns are reaching at their highs, just punching through that EMA 50 and then dropping down again. So what I did was I planned here, and this was on Monday the 17th, I planned here to do an entry just below that current price to sell. So we were going to sell this at $7.81, set a stop loss just above the last high, which was a lower high. This is the other thing we discussed in the previous tutorials. We want to make sure this consistently with bearish trends, lower highs and higher and lower lows, right? This is telling us that we are in a bearish trend, and if it's long, then we want to see higher highs and higher lows. Anyway, so this is where I set my stop loss just above the previous lower high or the previous high, and then my target profit I set at a ratio of 2. I was pretty confident was going to hit this one, so I set that ratio at 2. Again, we discussed ratios in the previous tutorials, so I said anywhere between 1.5 and 3 is what we're aiming for. So I set a ratio of 2 here. I was pretty confident it was going to hit that, and it surely did. Another one that I spotted was 3M. On this one, I did something different than I usually do. I decided to go long, even though we were in an obvious bearish trend. That is because I have got this indicator that I like to use, a head and shoulders or the inverted head and shoulders pattern. And this one is an indicator that we're going to have a trend reversal. So we haven't discussed that in our previous tutorials, and I'm going to do that in the next one. For now, I'm just going to mention that there is such a thing as trend reversal patterns. And a inverted head and shoulders is a pretty strong indicator of that. And in this particular case, I feel that the way I've set this up is quite reliable. And once you see this consolidating effect, in other words, we're in a bearish trend or a bullish trend. In this case, it is bearish, but it could be bullish too. And we see that the highs and lows here is sort of in a horizontal line. It's not going up bullish or going too much down bearish anymore. It's kind of flatlining, and that's a kind of a consolidation area. And what usually then happens is we wait for this breakout period, and this head and shoulders pattern indicates that to us that it's potentially going to happen. So what I did was I set an alert here on this line here just above $104, and I said that if the price reaches $104, it's pretty likely that it's going to be a trend reversal. And once that alert triggered, I then started to plan my trade, and I went to an entry here of $104.38, set a stop loss here at $100, which I just set just below the previous low, which was a higher low, but I set my stop loss just below that. And then you can see here 1.5 times was my reward to risk ratio that I set for my target price, which was $110.94. And again, it hit that very quickly within 4 trade days. Excuse me. Also, when I entered this trade, it didn't necessarily have this stochastics value at the lower end. Again, this is a trend reversal strategy that I followed here. So then the rules are slightly different, and it's slightly higher risk, but also higher reward potentially. So those were the ones that I just wanted to highlight. There's a whole bunch of other ones I've got in my lists that I've been working through and that I'm planning. Some of them I decided to go for, some of them I didn't. You can see here I did one on Pulta Group, whatever that is. It hasn't really achieved anything. I did some planning here, so I set up a short strategy, and it hasn't really achieved that, but I decided not to go with that one anyway. Here on Oracle, again, I set up a strategy, but I never executed this one. I didn't feel 100% confident on that one, and we can see a potential consolidation period happening here. Let's run through the other ones here. I did nothing there, but I looked at it. On tap, I did set up a long strategy here. It almost reached the stop loss, but luckily it didn't. And I set a target price there of 1.5, and it reached that within a few days. That was a couple of weeks ago. So I just keep it on my radar to see how they actually play out. So when I plan them and I don't actually execute them, I leave it as a red tag here. And I keep them in my list because I'm always curious to see what happened in the end. This one on workday played out quite nicely. So that one hit the target. Essential utilities hit a stop loss, so this one didn't work, but I didn't execute this one either as a trade, so it was just planning. This one also failed. This one also hit the stop loss, never hit that target price. Luckily, I didn't trade that. Same story here. There, I didn't decide to go for anything. I just wanted to keep it on my radar. Here we can also see that this one actually didn't work either. It hit the stop loss, but again, I didn't trade them. This one hit its mark. So this one was Moderna. So in a bearish trend, I set a stop loss there, target price. It hit it within a few days, so good. And yeah, I mean, you get the idea. So and one thing I wanted to highlight here again also is that risk-reward ratio. Here you can see a risk-reward ratio of almost 2. That means whatever I've put up as my potential risk, the reward is double that. In most cases, I would go for 1.5, meaning that if we do 10 trades, and as you saw from my stats in the beginning of this video, I do about 10 trades a month, sometimes more. But if I do 10 trades and I win 5 and I lose 5, I still make profit because my risk to reward ratio is not 1-to-1, right? It's 1-to-1.5 at a minimum, and sometimes all the way up to 3, depending on how confident I am about that stock hitting its mark. All right. Now, with all that being said, let's jump into it and actually see this in action. So the first thing I do here in TradingView is I've got a stock screener set up. And all I really did here is I set a price here of anything above $4.50. I set the markets here to USA. In fact, I don't want to trade all of these markets, so I'm going to show you the filters that I've applied. You can see here that we're only doing common stock, none of the other ones. The exchanges are limited to NASDAQ and the New York Stock Exchange in my particular case. And my volumes are from 500,000 and anything upwards or north of that. So that leaves me with 1,209 matches of stock. Now, all you need to do is click on this button to export the data to a CSV file. And once we've got that, you can head over here to my tools. It's at chrisforster.com/AI. And if you then open up the stock scanner app, you can upload that CSV and it can start processing the information. So if we do that, we just upload the file there, the CSV, and then we can set up our EMA lookback period. So I want to look back 20 days and make sure that those EMAs and SMAs are stacked chronologically, either in a bullish fashion or a bearish fashion, as long as they don't cross over. And then also we want to see that the stochastic value is below 30, equal to or below 30 for bullish stocks, and that the bearish one is equal to or above 70. You can optionally also select this check bullish swing higher highs and higher lows, or for bearish lower highs and lower lows. It's kind of in beta this. I'm trying to test this theory and how it works in detecting trends and trying to draw that out. I'll explain that a bit later. But for now, I just keep that unchecked so that I don't reduce my list too much with these indicators that I'm still testing. So anyway, once you do that and you hit submit, this will run for a bit. I've already done it. And then it will produce 2 Excel files and 2 text files. Once you've got them downloaded, you can then go back here to TradingView, and from the lists, we can then say, let's import a list. So we've got 2 lists to import. There's the bearish one that was exported from our tool, and you can see there's a couple of stocks, and there will be a bullish one, which we'll also import. So there we go. We've imported the bearish one and the bullish list, and they are not that long in length to go through, so we should be able to work through them fairly quickly. Let's start with the bearish one, and I can see a difference in the trend here, a lot less bearish stocks this week than the week before, so that's telling us something about the market. Things are looking a bit up. Everything looks a bit positive, so that is something to keep in mind when we run through the stocks. Now, first off the bat, I can see there was a bit of a crossover here. It will be a little bit more than 20 days ago, which is what I set up in the criteria for the search filter. So we can consider this one. We can see that it's consistently testing this EMA 20 that I've got set up here. So if we look at this indicator here, this is called the EMA ribbon. And for this one, I've got 4 moving averages set up: EMA 20, EMA 50, EMA 100, and SMA 200. Excuse me. So it's consistently testing this EMA 20 here, bouncing off of that. It's kind of already retracted a little bit, and we can see that here from the stochastics, it's already a slight bit above that 70 line, but also dropping back down again. So not the ideal time to enter this one, most likely. It would have been probably better to enter it up here, which was last week, Tuesday, and going short on that one. It did bounce back a little bit, so it is something potentially to keep in the list. Let's see how many other candidates we've got, and maybe we've got some better stocks coming up. This one, forget about this head and shoulders pattern here. We're not going to concern ourselves with that one at this stage. We're looking for a nice bearish trend, and we're looking for something that is consistently testing one of those EMAs or other trend lines that we can identify, which is not the case here. So we're going to skip this one. Then here we've got Frontier Communications. Let's see if we can find some patterns here that is of any interest. No. Chegg. No. The reason I say no on Chegg is I don't like the erratic change in price here. It looks like it's extremely volatile there at one stage, and it's kind of consolidating here a bit. So it's not really what I would like to see. The kind of stocks that are ideally primed is in a very convincing bearish or bullish trend, where we again see higher highs, higher lows for bullish, and lower highs, lower lows for bearish. I'm not seeing that here either, so we're not going to be concerning ourselves with that one. Let's see what's going on here. So we've got a lower low, a lower high. Here we've got a lower low, lower high. Yeah, this is not bad. It had a bit of a drop there, bounced back up a little bit. This if we just zoom out a little bit, we can see that there was a change in the trend not too long ago. So yeah, we could keep this one, I guess, on the radar. There is some volatility, so yeah, I'll keep that in mind, but I'm not going to flag it quite yet. Again, here we see a massive price drop, so it looks like this could be a little bit risky for my taste. Excuse me. If we look at the next one here, it looks like a bit of a consolidation here, a sudden drop, bouncing back. It's not the pattern that I'm looking for. It's not what I want to see. And neither is this. All right, so it looks like we won't be going bearish this week, apart from one or two of those stocks that I kind of liked a little bit. Now let's look at the bullish stocks. There's a whole lot of them. So I'm going to go through each and every one of these, but I might not talk through each of them because a lot of it will be repetitive. So what I'll do is I'll just plan through them, and when I find a good candidate, I will then resume and tell you what I've done. Okay, so I've just run through all of these, and I've flagged the ones that I like, and some of them were still flagged from my previous exercises. So let's look at them, and that would be my red list there. Now at this stage, I'm going to bring up my stock screener, and if I wanted to show all of my red flag list items in my screener, all I need to do here is to click on that and click on the red flag there, and now I can see my 27 matches. All right, now I'm going to start on this side, and I'm going to work from the bottom up, because the newest ones that I've added, the most recent ones will be at the bottom, and the ones I've been having there for quite some time, I should probably unflag them so they're off my radar, will be at the top. So we'll start here at the bottom, and I'll start rationalizing through each of these. All right, so here we've got Muller Water Products, and we can see that it's been testing this EMA 20 here quite consistently. It's on an obvious bullish trend, higher highs, higher lows. So that is looking pretty good. The stochastics is here below 20. It means that it's ideal and primed for shooting back up and getting those stock values up again. And we can see that it's been trending here and staying here above this 80 line for quite some time before it had this kind of reluctant dip down. So we want to be careful that it is not going to be consolidating. So that could easily happen after a big rally and a slow sell-off. It means that the stock could be consolidating. If we see a quick drop in the stochastic, it means that there was a sudden sell-off, and that could be due to profit taking. Of course, if you've got stocks and it's worth a lot more, you might want to sell that and reinvest it again or free up cash or whatever. But it doesn't mean that the stock itself has lost its value or perceived value. Whereas with a slow sell-off, it could be or a slow decrease in the bullish trend could mean that the stock has actually reached a perceived value and is potentially going to be consolidating. So this is something that I would be looking out for. But nevertheless, I would like to start planning and see what this could potentially look like. So we'll set that target price here for going long, the purchase price, the entry price just above the current close or the last close. We will set our stop loss here just below the previous low, which will be right about there. And then we will look at a target here. Now, there's a few things that I consider. First of all, the price. How much profit is it possible to make out of this stock? Because when I buy this stock, it means that whatever money I spend on it, I can't spend somewhere else. I've got this indicator here, which is kind of an echo indicator thing. I don't really use it for price prediction. I just use this to show me where the next 5 days ahead is going to be. Of course, I can see that from the calendar here at the bottom too, but sometimes I'm lazy. And I just want to drag that across, and that's what I'm doing here. All right, so if we put this to a ratio of 2, which seems it should be easily achievable with our risk to reward ratio, setting that just a little bit above the previous high. And we've been making consistent higher highs over several weeks now. So this should be easily achievable. But the reward here is only 65 cents. So that is 4%, which is not bad. Forget about the 65 cents. It's the percent here that we're interested in. So if we make 4% on this, okay, it's not horrible, it's not bad, but it's not the best stock that I've ever seen, or the best opportunity that I've ever seen. So let's move on. The next one here. So the reason I chose this one is we can see that it has kind of almost tested this EMA 50 line here. It's done so again recently. It's been up here above the 80 stochastic mark for quite a bit. It had a bit of a drop and then it bounced back again. So indicating to us that this stock has potential, and I think I just killed it. Stochastics. Okay, so let me get that back up here, and I don't know what I just did. I think I moved my one stochastics on top of the other one, so I'm going to switch off this one for now and just keep my stochastics on. All right, that's okay. So we can see that it's bounced off of here, and if we had to plan on using this stock and going into this trade, then let's say we set our entry price here, our stop loss just below the previous swing low, which will be here, and our target price in this particular case, I would set it no more than 1.5, because I think this one is a bit risky. It's taken a bit of a dip. We could see there that it's taken a bit of a turn, so I will set my target there at close to 1.5. So that is what I would do if I had to enter this stock. All right, let's look at the next one. What is this? Flowserve Corporation. And give me a second while I quickly fix this stochastic indicator. Okay, we're back, so I can see my stochastics again properly. So what have we got here? So with Flowserve Corporation, let's have a quick look. So again, we can see that it has kind of tested this. It's in somewhere in between this EMA 20 and EMA 50 that I've got here, and bouncing back off of that quite consistently, making higher highs and higher lows. Again, seems like this trend has been consistent for quite some time here since around March. So it's fair to say that if our stochastics is low, and if we're bouncing off of that imaginary line here between the EMA 20 and the EMA 50, then it should bounce back again. It's currently had a bearish trade the last day, which was Friday. So if we entry right here and we set our stop loss just below the previous day close, and we set our target here at, I think, 2 is going to be very reasonable. So anywhere close to a ratio of 2, just like that. And we set that for the duration of 5 days. So that gives us here a profit of 2.2%. Again, that is not ideal. So what I would do is I would like to see if I bring this closer to about 5%, where does that put me and is that realistic? And then if I adjust my risk reward ratio accordingly, what does that look like? So if we had set this to 1.5 or to 2, do we think that that is reasonable? Now, if we say that 5% looks a bit more appealing and we can see that that difference there is $1.88, then we also have to look at the ATR for the stock. Now, since we have it selected here and we've got our red list switched on here, it means that if we scroll down, it will see the highlighted element in our stock screener. And I've got my ATR value switched on here so we can see it, and that is around about 75 cents, 74.5 cents, which is not that much. So in other words, if we were to hit this mark, we will have to have 3 consecutive bullish days, each of them hitting that maximum ATR, making full candles, which I don't think is extremely likely to happen. So I'd like to watch this one and see what happens. Also, I'm seeing that there was this inverted head and shoulders pattern that for me usually works out quite successfully, and it always reaches close to or at least hitting the target that it set out here, which is much higher than the current price we've got here. It's never guaranteed, but it is something that is making me feel that maybe this could be worth looking at. So I'm going to keep this on the radar. I don't think I'm necessarily going to trade this one yet. All right, and here we've got Copart. The reason I picked this one is also because we've had a consistent higher highs and higher lows here, although it looks like we might almost be hitting a lower low, but it didn't quite happen. There's a lower low, higher high, higher low, higher high. So it's one that's worth looking at. Again, if we had to enter this one, we would enter right there. We'd set our low just below the previous swing low, and we would set our target price here roughly at 5%. And we might want to adjust this a little bit to set at this 1 to 2 ratio. Okay, so there we go. And now we can see that's what this strategy would look like. So we're not hoping to make a higher high here. We're just hoping to kind of hit this mark here, which is below the previous high, which could work. So actually, I think I'm going to change this one. Oops, now I've removed it. So that's not what I wanted to do. I'm going to undo my change and put it back here. There we go. And what we'll do from here is we're going to flag this one and give it a blue label. So from here, I'm going to choose blue. So that's my blue list, which is the short list from the short list, but it is not yet the trades that I'm going to execute. Okay. All right, so here we've got Eaton. Let's look at this one. Again, same story. If we had to go in with this one, we would create an entry point there. We would put this below the previous swing low, which is around about there. And we would want a ratio of 1.5 here, giving us a pretty high percentage there. So let's see. I think we can reduce the risk here a bit, and we can switch this a bit lower. If we can hit 5%, that's good. That looks pretty good. So that gives us 5%. It's in a stock that's costing $162. Is that correct? Is that the current price? No, sorry, it's $203. And let's look at the ATR here. So that ATR is 3.5. That's not very high. That's a very low volatility that we've got here. So probably not one that I would like to go for at this stage. All right, now we're looking at service now. So again, I'm going to do my planning here. Entry price over there. The stop loss just here below the previous low. And then we set a risk there of, I would imagine, 1.5-ish, but I'm going to try and keep that here to 5%. And let's switch that to 5 days. All right, so if we look at service now, the last price was $569. The ATR is $16 an hours. Here's 28. So this is very achievable. I think this is a pretty good one. I probably want to watch this one. So I'm going to change this label here to blue, and that's going to go to my next shortlist. All right, Ingersoll Rand. Okay, Ingersoll Rand. So we're going to look at this one. If we had to enter, we would enter around about here. Set the stop loss between, below the last swing low, which is over there, and we would want to hit a mark here of at least 1.5, giving us 3.5%. There is not that great, but it has a pretty high potential of hitting that, I would think. So let's see, it's got an ATR here of 1.14 and we've got 2.29. Not bad. I'm going to switch this to a blue flag. Okay, so on DBX here, we've got quite a bullish pattern that's been running for quite some time. So very strong bullish trend here, and then a slow drop off on the stochastics. Excuse me, turning this back into the buyer's market, if you will. And if we had to enter this one, we would enter around about there. We'd set the stop loss just below the previous swing low, and we would set our target here to be safe at 1.5-ish, giving us just over 4% return on this one. It's not bad. I think we can hit that quite easily. In fact, we can probably increase this a bit to 5%, and I think that should do it. Yes, definitely. Dropbox is one that we'll be looking at. CFLT, same story, quite strong bullish trend. Ideal location on the stochastics, so we would enter there. The previous swing low sits there, and 1.5 times to make a profit. This is looking good. That's more than 10% there, and that's where our reward would be. So this is a really good one at that price. This is ideal. I think I'm most certainly going to go with this one. I'm already going to put it on my green list because that's going to be a go. Okay, on this one, so what have we got here? Clean spark. If we enter, we would have to enter there. Our stop loss, the previous swing low is quite low, so I don't think we want to go all the way there. I would then set it just conservatively below the last day close, right? The last bearish close. And we could set this here at 1.5. Giving us a proper 10%, again, more than 10% there. It's already gone up in the pre-market. So again, this is a green for me. I'm going to go for this one. Meta platforms. I don't think there's anything to do here. This one is on the stochastics quite high. And the rest we see in the list here is from my old previous stocks that I keep watching. But yeah, we can see the stochastics here is high. In fact, it's probably almost soon primed for going short, but it's on a bullish trend, so it's not something that I would want to do. Tesla, on the other hand, is ideal now for buying. We can see in the pre-market it's down a little bit, but we've seen the stock going up and down quite a lot, hitting the $300 mark here quite easily. So if we had to enter Tesla, we would do that here at more or less this price. We would set our stop loss just below the previous swing low, and hitting a 1.5 target here is going to be extremely easy. So if we do that, that is an 8% return, and I can almost guarantee you we're going to do that within a week. So I'll be going for Tesla also. Okay, and I think that's enough. From here, what I would normally do is I'd go to my blue list and see which are my best candidates, but I think I've already found them, the ones that I like with the highest reward. So here we see 5%, but we've had a very bearish day here. I don't know the history of the stock and what news was happening. Probably the earnings wasn't that great. So let's see here. Oh, it was actually great. There's some news. Heard on the street, so now goes for all bonus round, blah, blah, blah. I don't know. But these are the ones that I'll be going for. So by the way, if you wanted to do a further analysis on these, let's say for the stock now, you can also use the dashboard that I've got here to do further stock and trend analysis. So if we open the app, and all we need to do is to enter the stock ticker. So it was now. And then we drag and drop that CSV file we created in the previous exercise in there. And once we've done that, we can see here there's technology services. So we need to change the sector here to technology, which is XLK. And we set it to that and we hit submit. So when you hit submit, it's going to show you the stock trend versus the parent sector trend. We can see that it's kind of following that quite well. And remember, we said in the previous exercises that if a stock is on a consistent bullish or a bearish trend and the sector is on the same trend and the stock is following the sector, that we've got a 70% chance of that stock continuing to do so and heading in the direction that we're anticipating, which is what we're trying to do. Here we can see the support and resistance levels. So this is a new indicator that I've added to this tool. And we can see there's a resistance level here and we've got no supports. There's actually just a resistance here. And that's at the level of about 615. Yeah, 614.36. So if we looked at the stock here, if we put that below 614, we should be good. So yeah, this one actually does look pretty good. It seems like that could be a go. Let's look at the sentiment, the new sentiment. So here it looks a bit positive actually from the sentiment analyzer. And it's talking about ServiceNow and information available on the net. Now, if we wanted to look at one of the other ones, let's say IR or Dropbox, let's have a look at Dropbox here. So what did we say is our return there? Also 5%, which is not bad. It's a cheap stock. DBX is the ticker. So all we have to do here is we type in DBX. We don't have to drag and drop the file again. All you have to do is press enter. It's going to pick up the Dropbox information. It's still technology, so XLK should apply. And if we hit submit, we can see whether Dropbox is following the trend or not. We can actually see Dropbox has dropped down and the trend is going up. So anything can happen. We can see there's a resistance line here at $28, which is still below what we are trying to achieve. Well, not really. It's right at that line. So could be something to consider. And then we've got a support line here at, what is that value? $27.18. Yeah. Okay. So that is that. The stock sentiment, the new sentiment looks fairly positive for Dropbox. So, make of that what you will. But that's the process. And that's how I go through my trades. And once I've got a green list, like I've got here for these three stocks, I would look to enter those into a trade. And I'll probably do all three of these this week. So I'll head in for Tesla at these prices that you can see here. I'll go in for CleanSpark because the reward is really high. That 11% is good return. And I'll go in for Confluent here because, again, we've got a good return there. On a fairly cheap stock, we can be making quite a bit on every dollar. So that is everything in a nutshell. That was quite a lot of information. This is not the be-all and end-all of stock trading. This is just my particular strategy that I've been following and that has been helping me to achieve a really high success rate in recent times. But of course, it's volatile and risky, and you really should be doing your own homework and understand markets before you invest money and potentially lose money. But I wish you all the best, and I hope you find this useful. Next time, we'll talk a bit more about position sizing, and we'll talk about swing trade patterns and candle patterns that indicates potential reversals of trends. Okay, have a great week, and we'll talk soon.